Hello traders. The title of the video is how to trade Forex like a part-time Forex trader precisely without losing big a part of free. I hope you have already watched part 1 and part 2 and you have understood everything. This is part 3 of that series of video. Let's get started. In this tutorial, I want to talk about which time frame, alright, a part-time forex trader should be looking for trading setup. I have touched upon that topic in the first part of that video, at the end of the first part of that video. But what I'm doing today, I'm going to expand on that topic about the time frame that a part-time trader, a part-time forex trader should consider, what he or she should pay attention to, all right, to improve the part-time forex trading. Let's get started, all right. So sometimes I record a video is for beginners, forex traders, all right, but this one is for more, all right, fully fledged part-time traders, that want to improve their part-time forex trading. So as I've already mentioned it in the first part of this tutorial, we can use the monthly chart, the weekly chart, the 3-day chart, the daily chart, and the 2-hour time frame. So those are the time frame that a part-time forex trader should consider when he or she is looking for high probability trading setup. Now, what do I mean by that? So what exactly do you need to look for? So the strategy that we are developing here, we are using those time frame because each of those time frame each of those time frame is a signal time frame for another higher time frame. So for instance, the monthly chart is the signal time frame for the yearly chart. The weekly chart and the 3-day chart are the signal time frame for the quarterly chart, and the daily chart is the signal time frame for the monthly chart, and the 2-hour time frame or 4-hour time frame are the signal time frame for the weekly chart. All right, so the trick that we are doing is that a part-time forex trader will use a signal, a trading signal, as a trading setup. So what you are trying to do is that, for instance, there is a valid trading setup on the weekly chart, for instance. All right, now the signal is fired on a 2-hour time frame or 4-hour time frame. Now you will use that signal as your trading setup because you are not watching the market all day long. All right, traders that are watching the market all day long know that there was a setup on a weekly chart. If they are professional traders, they will know that there is a setup there. They will be waiting for the signal on the signal time frame, which is the 2-hour time frame, 4-hour time frame for the weekly chart. Now you, because you are not watching the market, all right, all you need to do, if the signal fires, you are now going to work. You are waiting for the entry. That's it. Do you think you can work with that? Okay, let us know in the comment section. So again, another example will be, for instance, all right, there is a trading setup on the monthly chart. All right, now for that trading setup, you want to make sure that it's a high probability trading setup, as I mentioned in part 1, because we are talking about a trading setup that you master, that is working for you. So I'm not going to dwell on that anymore because I already talked about it, all right, in part 1. So all you need to do is to go and watch the full length of part 1 to understand everything. So you use if there is for instance, if there is a valid trading setup, a high probability trading setup on a monthly chart, now the signal is fired on a daily chart. You, as a part-time forex trader, will use that daily chart signal as your trading setup. All right. Okay. If you are using the 3-day chart as a swing trader, so you want to first find a high probability trading setup on the quarterly chart. If the signal is fired for that quarterly chart on a 3-day chart, you will use the 3-day chart, okay, as your trading setup because you are not watching the market, okay, all day long. So there are a group of traders that are watching the market all day long. They know that there is a signal, so they want to enter a trade. So they are waiting to enter the trade. And as they do, if you also enter your trade carefully, you will see that you will be rewarded, okay, together with those traders. All right, this is very, very important point for those who are trading Forex as a part-time traders. Okay, so but if you are a day trading, all right, you want to day trade, all right, so you want to look for your trading setup, okay, on the daily chart. But because your trading setup is going to be on a daily chart or even 2-hour time frame or 4-hour time frame, for those who are scalping, if your trading setup is on a daily chart, you want to make sure that okay, there is a high probability trading setup on the monthly chart that has generated that signal on the daily chart that you are using as your trading setup. But the signal is fired, people will be waiting to enter that trade, and you want to enter the trade together with those people. All right, so I have one example here because I want to do a real-time example here. So here we have, so I'm on the monthly chart, okay? So I'm not using a monthly chart if I'm a part-time trader, okay? Using a daily chart for my trading setup, all right? Instead of going to the daily chart straight away looking for the setup, I will go first to the monthly chart and find a high probability trading setup that I have been using before that have been working for me. Because when we are talking about a high probability trading setup, it's a trading setup that has been working for you consistently over the year that you understand and you have mastered. So watch part 1 and you understand more, okay? So because I want to find my trading setup on the daily chart, I go first to the monthly chart. Here I can see a bearish divergence. I'm using a stochastic 833, the technical indicator that gives the best okay setup when it comes to divergence. So stochastic was forming a lower high right here. The price was forming a higher high here. Not a higher high as such, almost equal high. See, there was this high, it went a little bit above it, but the stochastic was okay declining. If you accept that, where I leave this line here on purpose because I want to use it. The pink one there, you see, after this candlestick bar, that's where we are. The stochastic exhibit a bearish divergence. You may say here, it become clear after that candlestick bar, and then you put it there, yes or no? All right. Okay, so there is a bearish divergence on the monthly chart. Now I know that those who are trading the USD card, all right, the dollar Canadian, the US Canadian dollar, all right, and they will be watching it, all right. They will say, oh, okay, this is a bearish trading setup. So those traders will go to the daily chart waiting for their clear cut signal on the daily chart, yes or no? So the signal is here. See whether so that bullish candlestick bar on the monthly chart was closed somewhere at this point in time, and then the price start coming down. You see here. It's the beginning of May. So the month of April was closed. Beginning of May, you see here, start coming down. So you are on the daily chart. So what is your signal for that divergence? See the price from a new high in comparison to this high here on the monthly chart. Then it start coming down. All right. The minimum expectation for you is that at least you expect this common central line, this one. Will you? Or won't you? All right. See, price was placeable and try to retest it here. So you may say, Joe, that's not correct. It has to be here. Well, that's it. Either way, it finally breakable. I want to show you something else, okay? Apart from that trend line, don't forget that trend line. So we have a bearish divergence. Look at it. We have a bearish divergence. One group of traders sold it first. Then we see this, okay, small consolidation in this channel here. And then one candlestick bar on the daily chart is closed below it. See. This on this particular day is a nice setup. On the 11th of June 2017, is it Sunday? Let's see, because we are talking about Forex, can be Sunday. Where am I? Oh, that's not what I want to do. Okay. 11th of June. I want to play with it a bit. All right. That's June now, 11. You see, it's a Sunday because it's a Forex market. How did I know? Because of the size of that candlestick bar there. So Sunday night, this is what you see. So it comes Sunday night, close here, bearishly. Now Monday, you see now. What's going through your mind? So this is your, okay. So on the monthly chart, okay, you see here. First group of traders sold it. If you didn't use the first trend line, which means breaks below, retest on the edge of the first trend line, you draw it roughly like this. You may say, oh, okay, George, he break below, now he's retesting it. So you will be using this, okay, as your setup because you are part-time trader, and you'll be waiting for your entry. Your stop loss will be above the red line, yes or no. But if you did not use the trend line, you'll be saying, all right, Sunday candlestick bar close below. All right, that okay, small consolidation. Monday is looking bearish, yes or no, because of the continuation. Okay, so you will say he went down, there's a consolidation, and then you will be expecting a price going down more. All right, so you will use this as your trading setup. Then what you need to do, all right, so though you are using the daily chart as your trading setup in this case, all right, the real setup is occurring on the monthly chart. So those who are trading on the monthly chart know that there is a signal that is fired Sunday night. Now you will join them, all right? You'll be on that, so you can see it here, the pink vertical line, you can see here. On that day, you'll be checking your, so whether you're at work or not, you'll be checking the hourly time frame and looking for the time when those people are going to enter the trade. And when you are entering the trade on the hourly time frame, you will drop down to the 10-minute time frame to pinpoint your best entry point. So you'll be doing daily chart, hourly time frame, 10-minute time frame. So those who are using the monthly chart straight away as their trading setup will be entering, okay, the trade on the hourly time frame. But you will not, because you are using their signal as your trading setup. So there is a high chance if you have a high probability trading setup that you already understand, that you have been trading for some time, that you have mastered, you must find one. I talk about my own high probability trading setup in part 1. So I'm not going to talk about it again, all right? So you need to watch part 1, part 2 before watching part 3. So once you find a high probability trading setup, one example that I'm giving you here is that you have recognized a bearish diversion and you have traded it for some time, you understand it, that it's a good setup, work very often, good for you. Now you see like this, you will not use this as your trading setup. You, because you are part of the trader, you use their signal. So you wait for their signal to fire first because you are at work, all right? A signal is fire, one group of traders will be willing to enter the trade on their signal time frame. In this case, their signal time frame is the hourly time frame. But your signal is on the hourly time frame. And your entry will be on the 10-minute time frame because you are using their signal time frame as your trading setup time frame, and their entry time frame will become now your signal time frame. But you want to select another time frame to enter the trade. Unless you are more advanced trader, you can control it, take it from there. But the most important thing for a Forex, a part-time trader, is to know exactly how the trade even, okay, is formed, the structure that he or she is trading, one has mastered it, one has traded few times, it's a high probability trading state. I don't understand. Okay, because you don't want to be at work, okay, worrying too much about the trade, all right? You don't want that, isn't it? So you want something that you understand. So if it has been working for you consistently, there is a high chance that, okay, if you keep doing the same thing over and over and you master it, it should produce a good result, all right? Instead of doing this today, doing another one tomorrow without any focus, without knowing what's going on and losing all over the place. You want to be a more composed, all right, part-time forex trader. Okay, this is it. All right. So I hope you have learned something from this tutorial also, and we put into use to improve your part-time forex trading. So this will conclude this series of video about how to trade forex like a part-time forex trader more precisely without losing a big part 3. Watch part 1, part 2, and then part 3. Get everything together, and most importantly, while you have found useful in this tutorial, okay, start working on it first, gain some experience, okay, and then when you are ready, you start okay, you go in live. So use a demo account. So you start working on one particular strategy. You use a demo account. You say, well, it's working, it's working, it's working, it's working. Now I have to go live. If you're going to go live, go gently, all right? Don't go gently. Go gently, because it's not because it has worked 3 or 4 times. The 4th time, the 5th time, it may be a losing trade. You want to be in control of it, and the first step to be in control of it is to use a signal time frame, all right, as a setup time frame, which means other traders are helping your trade. At the time they see the signal, they want to enter the trade. And then you will enter after they have entered their trade. You are joining them. That's what you are doing. That's what you are doing. So those who are on the monthly chart want to enter the trade, you allow them to enter first, okay, on the hourly time frame, and you go on the 10-minute time frame to enter the trade after those people, because those people will be defending their position. They will be working for you, so to speak, buying. If they are buying, the price has a more chance to go up. Most importantly, all right, if they are serious, okay, buyers, or sellers if you are selling. So this is it. If you have any question or suggestion, okay, put in the comment section, and in due course I will be recording another video to answer your specific question. If you find this video truly useful, give us the thumbs up. If you dislike it, give us the thumbs down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. One thing you do not want to do as a part-time forex trader, do not enter a swing trade during the Asia session, all right? Expecting it to be in place until London is open. Usually they will take you out as soon as London is open. You don't want that. All right, so stay away from the Asia session. If you are a swing trader, do not enter your trade, okay, during the Asia session. If you are a swing trader, trading part-time. All right, one more thing. So happy trading to you all, and speak to you soon. We are the TSTW 24 traders.